If you invested $10,000 in Nvidia stock in 2013, you would have $776,000 today. An incredible sum for making an investment in one stock. Look at the returns for Nvidia stock here. A total return of 7,660% in this time, and much of those returns coming after 2019 and much of it after 2020. NVIDIA's graphic processing units are being widely used in data centers worldwide. That's one popular use case. Another popular use case is for gamers. NVIDIA's gaming chips makes playing computer games that much more fun and exciting because it increases the frame rate, increases the clarity, and allows you to play games that require much stronger graphic processing needs. And finally, NVIDIA's GPUs are used for mining cryptocurrencies. So, with the popularity of cryptocurrencies starting in 2020, the prices exploding, people bought a lot of NVIDIA's graphic processing units to help mine cryptocurrencies and make money in that process. So, all of those reasons have helped NVIDIA's sales explode, and some of which is turning downward. As you see, the stock was up way, way more. It came down dramatically, and now it's bouncing back up. So in this video, I'm going to talk about how NVIDIA's stock price soared to these levels. I'm also going to answer if investors in NVIDIA stock today can expect something similar over the next decade, or is it too late to invest in NVIDIA stock? So I'll go through that and then I'll answer that question at the end. So let's get into the first part. So part of the reason why Nvidia's stock price exploded so much is because of the revenue growth, sales growth, right? Sales were around 4 billion in 2014, and look at that explosive rise all the way up, and it was even higher, but in the trailing 12 months it's 27 billion. That's come down a bit since sales of NVIDIA's GPUs are less in demand as economies have reopened, as cryptocurrencies prices have come down, so has demand for NVIDIA's graphic processing units. Still, going from 4 billion to 27 billion in 10 years is massive growth, and that's helped fuel the rise in the stock price. Next, you have Nvidia's earnings per share over the trailing 12 months, and that's grown explosively as well. You had earnings per share at less than 50 cents in 2013, and that exploded all the way above $3 earnings per share at the heights in 2022. That has come down as well to $1.74 as sales have come down, as Nvidia had to offer discounts to sell some of its excess inventory in recent quarters. Still, that is an explosive increase from 2013. And earnings per share is one of the most vital metrics that influences a company's stock price, because as an owner of a company's stock, you are entitled to your prorated earnings for the company's totals, right? So if you own one share of a company that has 100 shares outstanding, you're entitled to 1% of the company's profits. So as the company's profits increase, your ownership of that company entitles you to 1%. So when the profits increase, your 1% becomes that much more valuable, right? Because now you've got 1% of those, if it's 100 million, you've got 1 million. If it's 1 billion, you've got 10 billion. So as that grows, your value in ownership rises. Your value in ownership rises. That's the important thing for investors to think about here, is that when you own stock, you're owning a piece of a business. It's not just some instrument that you observe in the market that changes price up and down, and you look at the chart and you notice the price fluctuating, and you're hoping that you buy it today at a certain price and then you can flip it to somebody else at a higher price 6 months later or 9 months later, right? you might get that benefit. But the more critical element is to look at the company's earnings. That's investing, right? The other thing is more like speculating, where you're buying the stock hoping that the price increases over the next few months. That's more like speculation, not investment. When you buy an ownership of a business and you hold it for 5 years and 10 years, and you're relying on growth in the earnings per share to boost your ownership price, that's more investing. That's not speculation. So that's investors will find more success in investing in that way over the long term, rather than speculating on changes in the stock price, which can be volatile and can be very hard to predict. So to answer the question if Nvidia stock investors of today can reap a similar reward over the next decade, I wanted to look at the company's valuation, and the stock is trading at a forward price to earnings ratio of 43.86, which is about average for Nvidia stock looking back over the last 2 or 3 years. Of course, it traded at much higher valuations, closer to 100, and it traded lower, closer to 25. So 43 is about at the middle of where it has traded for. If you look at this chart, this is the valuation chart going back a couple of years. Now, this is important because the price to earnings measures what you're getting for the price that you're paying. What you're getting for the price that you're paying. Some investors might look at the price of a stock and say, well, it used to be $100 and now it's $50. That means I'm getting a bargain. I'm getting 50% off. Now, I will caution you not to make that conclusion. Don't make that conclusion. Just because the market price goes from 100 to 50, you're not getting 50% off. And here's why. Here's why. Pay close attention now. This is important. Because if the stock price has fallen by half, but earnings have fallen by more than half, then you're not getting a better value. You're actually getting a lesser value than you were before, because the contents, what you're getting for the price, have decreased. So the price per earnings is higher. It's no different than if you go to the supermarket to buy soda, right? You could buy a 20-ounce bottle of soda for $2, right? So you're paying 10 cents per ounce. Or the market could tell you, all right, we're going to slash the price. We're only going to charge you $1.50. But now, instead of 20 ounces, you're getting just 4 ounces, right? So they cut the price by 50 cents, but they slashed the contents by 75%. So you're not getting a better value. You're paying $1.50 now for only 5 ounces. So you're paying 30 cents per ounce, whereas before you were only paying 10 cents per ounce. The price may be lower at $1.50 compared to $2, but you're getting much less in return for the price you're paying. That's the same with stock prices and businesses. The price may have come down, but the contents of what you're getting in terms of earnings and cash flow and assets may have come down dramatically more. So that's why I pay attention to the price to earnings ratio, the price to free cash flow. Those are more informative than just looking at the price, the market price. So judging from its valuation and looking at Nvidia's prospects over the next decade, they've still got excellent prospects. They're going to be the front runner in technologies like driverless cars, in technologies like artificial intelligence, in gaming, in data centers. So they're still on the leading edge of all of those areas. However, I don't think you can expect similar returns over the next decade. I don't think you're going to get the 7,660% over the next 10 years. But that's okay. You don't need to gain that much, right? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The point is, if you buy Nvidia stock today and you hold it for 10 years, you're probably going to gain value. Your wealth is probably going to increase. The odds are good that your share price is going to be higher 10 years from now than it is today. How much higher? Is it going to be 7,000% higher? Probably not. Probably not. But it is likely to be higher. So that's investing, right? You can buy this instrument today, hold it for 10 years, and it will increase your wealth. And that's the essence of investing. That's what investors, that's what I look for. That's the way I invest. And you could plan on holding it for 10 years, but if the price shoots up over the next 6 months and you want to sell it, you're free to sell it. But don't go into it with that mindset of I want the price to go up in a few months so that I can flip it, right? Go into it with the mindset that I'm going to buy this stock, I plan on holding it for several years, and if in the near term I get an opportunity to sell it at a much higher price, I might take that chance. But otherwise, I'm going to just hold this for the next decade. It's probably going to increase my wealth over time because the company's likely going to increase its profits in that time. That's why the stock price is going to increase, because its earnings per share are likely to increase over the next decade. All right, so I hope that was helpful. I hope that provided some insights, and I hope it can help you make some money. And that's all I've got for this video. As always, I truly appreciate your viewership. If you like this video, I'm going to add a couple of videos at the end that I think you'll also enjoy. So please click on one of those, and I'll see you over there.